All right, what's going on, guys? We got everybody piling in here. This is the Discord meeting. If you want to be a part of it, go ahead, hit that like and subscribe button in the description down below. Click that link. You can be a part of these. We have Awesome Art, B. Stewie, Dan, Bob, Dan, the greatest moderator alive. We have myself. Hello. We got Predator, Jimmy. We got Swervo for Prezi. What up, Swervo? We got Trevor and Yosef. And your host today is Kobi. Kobi will be taking us through his thoughts on the market. We had a little preamble before this. We had some chats about what was going on, and I unfortunately agree with a lot of what he's saying, but I want everybody to pay very, very close attention to what he says because he has noticed something in the market, and it is a warning sign. He's also going to bring you the watch list as well, because even with the warning signs, we still have to be vigilant. We still have to be nimble. And we still have to stay extremely focused. So let's please pay attention to Kobi. And Kobi, I just want to say thank you very much for giving us your thoughts. Go for it, brother.
Perfect. All right. Alrighty, guys. So I'm gonna walk you through just my thoughts, the overall thoughts on the market right now. So we're gonna kind of start with just the general market, like the SPY, the NASDAQ, the QQQ. So the first thing I like to look for when we get a big run up like this is the next thing I'm kind of watching for is a distribution day. So what I mean by that is a day that has lots of volume to the downside. So you could tell right away that this is a distribution day with above average volume from the previous day. If you look at the NASDAQ, gives you, that one doesn't have it. But if you look at the SPY, same sort of thing. So this day right here on Thursday the 20th is your distribution day. And that's kind of like your first red flag for determining, okay, could the market pull back here or starting to be a little bit more cautious? Thanks for posting that in the chat. You guys can look in the chat for the definition. So that's the first thing I look at. The next thing I want to take a look at is the leaders in the market. So the leaders determine kind of how the general market is doing, because they're usually the ones drive the market higher and higher and higher. So if you look at NVIDIA, you've had on that distribution day, you had you had a gap up, and then it just got pummeled throughout that whole day on a above average volume. Then you had 3 consistent days where it just constantly pulled back. So what we're on higher than average volume. So this is kind of showing me, okay, NVIDIA being a leader, this is going to just pull back, and it's showing a lot of weakness in the overall market right now. Now, another thing I used is, and me and another Dave I know, he's been doing this for about 30 years. He got me into trading around 2.5 years ago. He used the StockB. Let me see if I pull it up for you guys. So he used the StockB breadth indicator. Now this is just kind of showing you, okay, you have seen this? Okay,
I have seen this before.
So I'll put a link in the general chat after we're done. So this is just kind of telling you, okay, you've had, when we were running up, everything was green. You had stocks up 4% plus for the day. This is kind of the major 2 columns you want to look at. So you had number of stocks up 25% plus in a quarter. So you can just see it's just constantly going up. And then just recently, so on June 14th, this number started going down. Same with this number started going up. So number of stocks down 25% plus in a quarter. So it's just something more to give you more conviction, being like, okay, maybe we have to start taking the risk off. Maybe we have to start dialing back our trades and only taking those A+ setups, right? So and that's kind of what I'm doing right now based on what I'm seeing is like the NVIDIA's pulling back. The markets had those distribution days. And then you have stuff like NU. for example, that Dave brought up today, you have a beautiful breakout here on volume. So if we look at the 5-minute, look at this volume that came in here. This was very impressive to see. Big breakout on volume, and then it just got slammed the whole day. With performing markets, this thing should at least have some continuation. And this is something you really do not like to see here. This is just one example of a stock that's pulling back, but yeah, this is just probably one of the better examples out there right now. So right now, I'm going to use it kind of like a green light analogy. And this is how my other mentor, Dave, he explained it to me. It's stock trading regarding risk and position sizing kind of has 3 different stages. It's red, yellow, green. So it goes red, yellow, green, and then green, yellow, red. So right now we're in that green to yellow stage where it's like we got to start being a little bit more cautious and seeing what the market really does here and see if we get a pullback. So that like I said, that's considered taking half positions, only taking A+ setups, and just overall, just downsizing your trading. And I'm actually kind of hoping for a pullback here because that means a lot of things are going to start setting up. Because right now, if I look at my buy ready watch list or my watch list in general, I'm screening through stocks. I'm only seeing like four mediocre setups that I'm like, okay, do I really want to trade these? When the market's pulling back, and it's near, like, for example, if we look at here, when they had this sell-off and then it started building these, there was a ton of setups in here. Me and Dave had tons of setups where alerts was just popping off, and now we're getting up here and there's only a few setups. That's another telltale sign that we could potentially have a decent pullback here. Now, I don't know this for sure. I'm just seeing a lot of different signs that we could see a pullback here. And us swing traders, it would be awesome to see a pullback because that means a lot of things will set up again and we could get into some of the names. So yeah, that's just kind of my general thoughts on the market. Is there any questions? Like, this is completely open mic. Like,
I got a quick one for you. So I've seen the stock B thing before, but I've never actually used it or analyzed it. Do you know enough to kind of give us, like, if you're going to post that, could you, actually, it looks like you did post that, but can you give us kind of like your, if you know how to, like, throw out there, like, what are we looking at exactly? Because I have no idea what that is.
Okay, so the main thing you can use here is there's 2 different indicators I kind of like to use. Well, 2 columns really. I just like to look at the number of stocks up 25% plus in a quarter and number of stocks down 25% plus in a quarter. So pretty much what you want to see here, and he does a great job of this. You want to see this being as green as possible, and then like green being good, red being bad, and then you want to see this number starting to climb and this number starting to go down. So right here, we actually, on this day, today, we actually had a little bit of buying back up. That stocks being up 25% and stocks starting to only being down 25% in a quarter. Now, the other indicator I do like to use, and I brought this up kind of recent, and it's related to that, is this MMFI. So MMFI is just taking the number of stocks of the NASDAQ and the New York Stock Exchange and seeing which ones are below or above the 50-day moving average. So right now we're sitting at 42% of stocks are above their 50-day moving average. And the other really interesting thing here is when the market was moving higher, so the market during this stage, if we go back to here, it was moving higher. Then we go to this, the MMFI. This is actually trending lower. So the market's only getting carried by a few select names, which is like your leaders, like your NVDA and your AVGO. And now with these pulling back, we could see a bigger pullback and a quicker pullback because of these things aren't holding up the market anymore. Now, we could also see, there also is a variation that we could also see money starting to be switched into small caps or mid caps, but and that would be fantastic because then you just trade the mid caps and the small caps. But I would just like to see a general pullback, and just stuff that I'm seeing right now, it's not really meshing. It's not really meshing like it would when we're heading to the upside. So yeah, that's how you use that indicator, what I kind of look at. And then also the MMFI, if that answers your question, Dave.
Thank you for answering that. That stock B thing is pretty cool. I'm gonna have to look at it to see if it lines up with my views, because like when we were talking before this, there was a few things that I was missing, I feel like, and I try to keep everything as simple as I possibly can, but I think it's very important, especially like you brought up, we are not seeing a lot of good setups. When we only have 2 or 3 setups, it's very concerning, because usually we need to sift through, like when we bounce off that $500 area on the S&P 500 and we blew through that 21-day moving average, we were sifting through setups to find what the best setups were. And now we found we're trying to bounce off a 10-day moving average. We only have 2 or 3 setups, and the few setups that we found are breaking out and then pulling back. So I appreciate you bringing that up, because it does kind of stifle my excitement a little bit, and it's going to make me be a little bit more cautious in this market. I hope we get that. I hope we get a nice swift pullback without affecting NNE or DYN to the 21-day moving average, so that way we can set up some of these plays, man. I would really like that.
Yeah, exactly. Any other questions? Open mic, guys. Speak freely.
Jolene,
or a statement or anything like that. Yeah, go ahead, Dan.
So what I do to get a feel for the market is I track 50 different ETFs, all different types, every sector, different weights, everything.
Yeah.
And I can almost always tell what the market's doing by looking at those. And it's been since the last Powell news conference, when he basically said there's going to be, one. Well, when I first started trading with you guys, they were talking about 6 rate cuts.
Yeah.
Then it went down to 4. Then it went down to like 2. And this last conference, he, basically said 1. And since then, so many investors have just gotten so defensive. They're all in like energy or utilities or staples. I mean, I always get worried when I see my Staples ETF do well.
Yeah, because investors or mutual funds are switching to more safer investment. I can see how that works. But yeah, that's just another like, it's like a giant puzzle. You're just trying to piece together. And that market, like, if you read that interview with Chris Quilamagi, I think I sent it last week, and Dave kind of went over it in his masterclass last week. He talks about the market is going to give you hints, and it's just up to you to react to those hints and take action on those hints. So with all this kind of going on, yes, I could be completely wrong. This could be completely irrelevant, and we could just see the market gap up 1% tomorrow. I could be like, great, at least I'm still in a couple stocks. But right now, based on what I'm seeing, based on what I'm hearing, it's just time to kind of dial it back. We've already been on a nice run here. So now, and we got this big volume day. We got the leaders pulling back. We have the 50-day indicator showing that it's down sloping. So there's a lot of things working against us, and it's significantly going to decrease our odds when we're trading. So instead of being, it's just gonna like decrease our odds when trading. So that's just my thought on
I
it.
experienced that today. I took 3 breakouts. Well, 3 of the stocks that we were looking at, and we're looking at as a group.
Yeah.
I took 3 of them today because they went over resistance the way they were supposed to. They had huge volume. I mean, they had candles, volume candles you just couldn't deny.
Give me one name so I can look at it. That's right.
I don't know. Don't Friday to look. Hold on.
Okay. Yeah.
But they went nowhere. They literally went nowhere.
Yeah. So
sat there and stared at me.
Yeah. So, well, yeah, I would have to see which stocks you're talking about. But
I did next. I did.
Next.
Curve. I took Curve right at the end of the day.
Okay, that's probably why.
Yeah, that was the end of the day. So.
Yeah.
BRCC. I took.
BRCC.
Yeah.
Okay, so BRCC. Your entry probably would have been this day right here. This would have been your entry. You bought it a little bit extended. But yeah. This would have been your entry right here, the volume that came in. I mean, this had good volume here too, but it would have been this day. That's the breakout right here. So yeah. But yeah, I get what you're saying. Like breakout setups, it's a lot of different things combined. It's like a giant puzzle. But anyways, is there any other questions? Speak freely. And then if not, I will probably move into the 2 trades I'm in, and then
do it.
And then just watch this.
Let's hear about it, baby. I'm excited about it.
We'll go over SMMT. So SMMT was a little bit of a preemptive breakout. This I got in a little early, so yeah, it's the same sort of thing, guys. You got this big move up, then you have sideways action. It comes down, starts surfing this moving average, and then breaks the trend. So I played it this day. Let me zoom in for you guys. So I played it this day.
You there?
Kobi, I think your mic went out, brother. Mic check, mic check. Kobi, we lost you. He probably ripped out his microphone or something. Do. I don't like that air. I don't like that air. No. So I'll sing for you guys. Kobi. Bob, message him, would you?
Yep.
Thank you, sir. I think maybe everything in his froze, it looked like, because his cursor's not necessarily working.
It looks like everything is frozen on his end.
Yeah. Well, we'll give him a couple more minutes to see, and then if not, we can switch over.
He's probably listening, saying, I'm trying.
Yeah. Wait for me, guys.
I'm coming back.
Technical difficulties. Please wait. What's up, Jolene? No, don't mute yourself. Jolene, how are you doing today?
I'm good. How are you guys?
We're doing pretty good. I mean, we could be doing better. I mean, I guess we can't say that. Well, the whole market's pulling back. We're still making money somehow. It's crazy to me. It's seriously, we got into the 2 of the best stocks. Holy Diver's in here. Holy Diver! What's going on, bro? It's good to see you, man.
Hey, man, how are you doing?
Doing pretty
Long
good.
time no see.
Yeah, no, it hasn't been that long, but it's good to see you, man. All right, I think what I'll do, guys, is while we wait on Kobi, we're just gonna go. I'll go ahead and share my screen.
Hold on, I got a message. Hold on.
All right, I'll hold on.
That's what he says here. Wi-Fi crashed, he said.
All right. Well, this is what I want to do, guys. I'm going to share my screen, and we will go into exactly what he was talking about. Well, maybe I don't know. Maybe he'll pop in here. I don't want to talk about his trades because I rather him go over his trades. But the only two trades I'm in is DYN. I took it on this daily trend break right here.
All right.
Yay,
Back.
Kobe's back. Of course,
Oh,
right
what?
when I decide to share my screen. All right, go for it, bro.
That was crazy. That's what happens when
Be
you
crashing, bro. That's what happens.
when you have sisters and siblings and family members, man. All right. So
Those damn sisters. All right,
I know
got
I
your
probably
screen back
unplugged
up.
it.
Let's see it. Bro.
Okay,
Go
so
for it.
yeah, so everything's good. We're chilling.
Yeah, we're
Okay,
good. We
perfect.
can see you.
All right, so SMMT, like I said, little got excited on it. Now the reason I took it is this 5-minute volume candle right here.
Uh-huh.
It had some night. It had a really good push up on volume, right through this $8 area. So I took a small position on it, and had zero fall through. So then it came back, pushed up nicely again today on volume. Like look at this volume that came in.
Yeah.
Again, and then sucked back in. So I'm kind of expected to get stopped out of this thing.
It is still making new lower highs, and it is getting tight.
Yeah.
So, I like it. I still like it. I mean, obviously, I don't like with everything that's going on, but I still like the trade, dude. I'm still happy to see that you took it.
Yeah, and yeah, so we'll see where it goes. But the real trade that I should have been in instead of SMMT was DYN. DYN, and shout out Dave for taking this. This was a really nice trade. I wish I was in this one because for SMMT, the financials on it are not good. There's no projection or there's no future plan for SMMT, like sales wise or EPS wise. With DYN, there are like predictions that they will start making money soon. Like analysts are predicting that they will make money. So it's all pricing in for the future. That's what Dave always preaches. It's all about pricing in for the future. So people are buying in for those future predictions. And let me see if I can pull it up for you guys. If we go to, I'll show you
an example of something.
Yeah, I'll show you an example of what I mean by this. So if you look at, we'll start with SMMT. So this is MarketSmith. It's a very powerful tool. But so SMMT, this is the EPS growth over quarter. This is the percent change. And then this is the estimate for July 2024. And then this is sales percentage change. So they were actually making money here, SMMT. And then all of a sudden in December and the beginning of this year, they stopped making money. And now analysts aren't predicting anything for the upcoming quarters. Now, if you look at DYN, which shows weak fundamentals and there's not a strong backing to drive this thing forward further, right? But if you look at DYN, like they're going from not making any money to be in June and in September to be predicted to be up 40% in their EPS growth, which is a crazy jump. Well, not a crazy jump, but it is a jump, and it's giving that drive for this stock to actually go forward. So a really good example of this too is REBN. So if you look at REBN on the chart here, it had a beautiful setup. I always go back to the stock because it's very, very pretty. So you have this big gap up on news. So the news here was they were going to launch into the China market, their coffee brand. So that's a huge, like China, there's like over 1 billion people living there. So that's a huge market. And then formed this nice tight trend and then boom, just took off. And then you go to the fundamentals which is also backing this. Their sales, as you can see here, quarter over quarter, from a year ago to now, from 20 to 2023, has increased by over 100%. So that just shows more backing that this thing has to drive it forward and kind of have a story behind it, right? But it's just fundamentals are more there for the backing. We didn't even need to look at the fundamentals to tell that this thing is like a perfect setup. That's the beauty of price and volume and technical analysis.
Yes, sir.
Yeah. It's just I just kind of been playing around with that, and it's something else to look at. You don't need to look at it, and I prefer you guys just to actually keep it more simple. So just look at the price and volume. It's just something I wanted to bring up.
The biggest reason why Kobi and I do look into the fundamentals, though, is when, like we were saying just a couple months ago, when we had way more than just one or two stocks to look at. If we're wanting to get into, let's say, one healthcare, one communication, and one technology stock, instead of buying 3 technology stocks or 3 health stocks, we will look at the best of the best looking stocks. And then if we have 3 healthcare, then we'll look into the fundamentals to see, okay, all 3 of these meet all of our criterias on the setup. Now, which meet our criterias on the fundamental to know which one's the best. And that's where kind of that William O'Neill's Can Slim investing comes in. That's the S in Can Slim and sales growth.
Yeah. Yeah. So I see Swervo brought up MLGO and it kind of being similar. Now it is kind of similar in a sense. Yes, you kind of have a trend being formed here. Now it's not a clean trend line. Like you don't have multiple. I guess you could draw it like. I mean, it's kind of a tricky trend to draw, but it's not clean where you have multiple points touching this trend line, and then you also have. It's also forming lower highs here. Yes, you have like 2 days where it has a shakeout day and then it forms these higher lows. The other thing I do like about it that is it is surfing the 21 and 10-day moving average, but this is a tough one to play in my opinion. It just you would have had to play the gap, which you gapped up. How much did it gap up? 40% already. And then this game could have just slammed down, or like it just pushed way higher. You would have had to
really been keeping an eye on this in pre-market.
Yeah.
If you were watching this in pre-market, you could have said, okay, I see the volume coming in. Okay, the pre-market volume is much higher than usual. So then you would have had to play this not so much as a trend breakout, but more as an opening range gap up or an opening range break, because the volume was so immense. And if you would have played this on an opening range break, you would have made money. You would have made money on this if you'd have played the 5 minute.
The 5 minute right here.
Yeah, and
actually, no, you would have lost.
The first
because you played
minute, that's true.
Yeah, you would have been stopped out if you played low a day.
Isn't that crazy?
So
man, you would have been so mad if you'd have played the 5 minute and stopped out.
Yeah. So yeah, this is a tough one, and this one
very tough one.
Not until this one wouldn't have shown up on probably the RS scanner just because it's so beaten down. Now it is because it just ripped 200-300% in a day, but this one wouldn't have made it on before.
Yeah, and look now in the after hours too. It came right back down.
Nice.
So
nice job to you, brother, for taking this then and having the balls to get in it, because
you took it.
Moose. Yeah, Swervo took it. Yeah.
Oh damn, that's spicy, bro. Nice job.
Beauty.
I'd like to see.
Yeah, I like you not holding it overnight, because you never know what this thing could do. Actually, I think I saw it on the 5 minute here. It actually traded above. Oh no, it came down and now it worked its way up at the end of it. But yeah, tough one to trade.
Yeah, he said more as an EP gap or intraday type trade. Yeah, I agree with you on the EP. Yeah. That's why I was saying I would want to take it as an opening range break, because that's what it looks more like to me. Now, I don't know the news or anything on it, but yeah, I agree. Good eye, Swervo.
So then we've been just talking about this stock for a while now, and I'm sorry for anybody who hasn't got in it, who weren't in it. Sorry, Dan. But
And
it's
Bob,
just
RIP.
when you're looking at trading trend breaks or a setup or study something like this. This is like REBN, NE. This is your go-to picture perfect stock setup. You have a big move up. Now, I know the news doesn't matter, but the news here was that Biden banned nuclear reactors from Russia from being imported into the U.S. So with something making nuclear reactors, this thing had a big move up, and then you get a pullback, and then this thing just runs really high. Now, like I said, you don't need the news when you're playing price and volume, but that catalyst behind it allows the stock to drive to have a massive move, right? So something like this. So me and Dave kind of had a little discussion about what to do with this stock. Now, I'm probably going to sell my shares, the remainder of my shares tomorrow morning right at open, just because if this thing pulls back, I don't want to be. I've already made a really good gain, like almost 175% on it. And if this thing comes back, that's like a 30 to 40% loss, which I really don't feel like giving back. I'd like to lock my profits. Now, this thing could give her to like $30, $25, but it's just already made a really nice gain, just locking in, locking some profits. And the other thing I'm looking at is like with the market being the way the market is now, the market might not affect this stock as much because it's backed by a pretty strong catalyst. But it's just, there's a couple different factors in play. And if this thing runs, it runs great. But I still know I've made a pretty decent gain on it, right? So we'll see how it plays out. We'll see how it opens tomorrow, and then we'll just see on it. But study this trade, guys. Take a picture of it, put it in a database. You don't get many of these too often, but if you do, it pretty much makes your account for the year or for a couple months at least. So study this. Any questions before I move on to the watch list? Beauty. Must be. All right. So we'll go into the buy rate. We'll go into my watch list. Like I said, there's nothing too special here. VLN, I'm still watching this. It just does not want to break this 10-day moving average, and it's just still. I don't even know how.
What, 4 inside days now?
Yeah.
So
yeah,
tight,
it's like
dude.
super tight, and I do want to get in this. But like I said, I'm dialing back my position. So if I do get into something like this, I'm going to be playing it probably half my position size, so half my risk. So instead of risking like
play too, so it's technically a lagger, which we always try to strive to be in leaders, but just like I tried to take NU, it broke down. VLN, it hasn't broke down or broke out, but just keep in mind when you're playing VLN, it is a semiconductor and it is a lagger compared to its leader NVDA. Just keep that in mind.
Yeah.
How do the financials look on VLN though? I haven't even looked at those.
They're not crazy.
Okay.
Nothing crazy.
Okay.
So yeah, it's nothing crazy. Like I said, technical.
Looks good, though.
Yeah, it looks really good, and that's why I want to probably take.
I like that base breakout too back there on 520 between 524 and 64. That was a nice base breakout right there. Yeah.
Yeah, right here.
Nope, up. That one too. That one too. Yeah, I didn't even see that one. No, I was talking about the other one right before the run up. You were up there already. Yep, right there. I like that.
Yeah. Yeah, it was very short consolidation.
It was.
That's the only thing, but yeah, this is looking good. VLN, mark that one down. Next one is Next. Me and Predator had a good little talk about this one last night. So Next, it's having a really tough time crossing this $8, $8.20 area. Some $8, $8.20 area. So if we could, and it's got really, really tight here. I just want to see if it is within its ADR from the 10-day from the breakout area. So we'll see if this gets some volume. But like I said, if my full position's $100, I'm only probably going to be risking $50. I'm going to be dialing back just because of the way the market's kind of reacting right now. Then we have LSF. So LSF, definitely a little interesting one here. You have this same thing. You have this big move up. Now you have this beautiful trend being formed, and it's getting really, really tight. Now this is a 16 ADR, and you have it building these higher lows here and holding that 10-day moving average.
Yeah, we were talking about that.
It's more not. Yeah. So we'll see. Yeah, it did held. It bounced right back off of it. So we'll see how it reacts tomorrow. It's looking nice. I would like to see it get tight one or two more days, but we all would like that. And then we have GEV. So GEV is a newer IPO, and it's just forming those higher lows, bouncing off these moving averages and forming this area of resistance that it can't cross at this 180 area. So yeah, I would just, these are kind of my 4 top watches for tomorrow. But
I didn't have GEV. What is GEV?
Electric
products
is an electric power industry.
Is that in utilities?
Stores electricity.
Okay. What is that?
It kind of deals with everything from nuclear to wind.
It's industrials.
Is it industrials? Okay.
Yep.
Actually, let's see the fundamentals.
Part of GE. It's like literally part of GE.
Oh, is it? Okay. So it's just like their sister company.
Oh, it's this. Okay, so.
Well, that's nice. And look at their fundamentals too.
Yeah, so they went from not making any money to actually making some really good money.
That. I didn't have this on my watch list. I appreciate you bringing this up, man.
Yeah, no problem.
This might be a good defensive play too.
It's actually for the IBD is putting it in energy alternative. So right now energy is as an IBD is ranked 12 out of the 197 different sectors. Okay. Now, if you guys don't know what that means, it's just IBD or Market Surge does this thing where it ranks the different industries based on their RS towards the overall market. So like something like VLN, which is in the semiconductors, which is like your NVIDIA, AMD, stuff like that, it's ranked number 2 because it's just carrying the market. So we'll see where the money starts to switch here, because these semiconductors might start to fall on this IBD industry rank, and you might see energy and consumer staples start to climb. So always kind of just scanning for that.
Sector rotation.
Yeah. Pardon?
If I can speak real quick about VLN. I am really heavy in semiconductors. They have done me well. But the last 3, 4, 5 days, they have struggled bad.
Oh, sure.
Yeah. I think that's why we're seeing VLN have issues. I mean, if they knew it's having issues, then obviously VLN's going to have issues, right?
Yeah, they gave 6 days back in 3 days. I mean, it was a heavy pullback.
Yeah. So, Swervo said, could you guys explain a bit more explanation between trend breakouts versus base breakouts? So, I could probably take the base breakouts. Dave, do you want to take the trend breakouts?
Yeah, sure.
Okay. So, I'll do this base breakout. So, base breakouts are pretty much, they're very similar, trend and base breakouts, but base breakouts are pretty much, you have this flat area along the top that's forming a certain area of resistance that the stock cannot cross. And then you have it forming these higher lows and getting tighter and tighter, which is which is kind of like a VCP pattern, which is what like volatility contraction pattern, which what Mark Minervini, he lives and dies for. And this is exactly what VCP is. So you have this contraction of 13%, then you have it of 8%, and then you have the final contraction here of 3%. So it's getting tighter and tighter and tighter with this area resistance at $1.80, right? And then you have these higher lows being formed. So that's just kind of the gist of the base breakout. And the other thing to keep in mind in the base breakout, which I almost forgot, was the volume. So when you're seeing VCP and stuff getting tight, you want to see this volume start to dry up like this. So you have volume here, a little bit of drop here, then you have big drop here when it starts to get tight, and then you have a huge breakout. A good example of this is SHIP. So I always go back to SHIP because it's just a really beautiful kind of setup. What do I say? Kind of, it is a beautiful setup.
Yeah,
so you got this move up, right? And then you have this base being formed here, and then you see how it gets higher lows, and forms an area resistance around this 970 area. It just can't cross it, and then it gets so tight, crosses 10-day, and then boom, on the breakout day, look at that volume that came in. You have this dry up, and then boom, break up, and then you have this nice run. So that's just what we're looking for, Swervo, if that answers you the base breakout question. And Dave, you can go over the.
Well, no, you can just bring up NNE again just to show them.
Yeah,
you know,
true.
we call it and I don't want you to think, Swervo, they're all breakouts. And if you follow Christian Quilamagi, which I'm pretty sure you do, he calls them all breakouts. We familiarize ourselves with one being a trend and one being a base, so that way we know what we're looking for on the chart. It simplifies things for us as users and as instructors to kind of give you an idea. So this, what you're looking at, you can see his technical patterns in front of you. Instead of forming that base at the top that you could set a cup on, we're actually creating a ramp. We have an ascending trend line from the bottom, and we have a descending trend line from the top.
Yeah. All right, let me try to pull it up for you. Let's see if I can do this.
You're getting fancy.
I just closed my trading view.
No.
Whoops. Well, I guess you don't get to see it. I kind of butchered that one.
No, that's all good.
Usually you can like restore. Oh, there we go.
Oh yeah.
You go, computer maker.
Yeah, you're putting me to test here now. So yeah, it's just
everybody's
your comparison right here.
What do you
all
take
right,
a school to?
So right there on the left, you can see the technical pattern from that 1071 area is sloping down, and then we have an ascending trend line up from the bottom. As where SHIP on the right, we have a flat top. And that flat top, sometimes, and sometimes trend breaks work out better in certain markets, usually after a big pullback. And then the base breakouts tend to work in like a sideways choppy market. And then when the market starts to take off, usually your base breakouts tend to take off. So it's really discerning on what type of market we're in. And we just depict those to generalize them different. So they're not generalized is what I should say. So we have your trends, which is this, you'll see ascending and descending triangles where a base, and that's my favorite base right there. That is marking NVIDIA. That used to be the $500 area. I'll always know it as the $500 base breakout. That was over a 6-month period. And I like you drawing that ascending trend pattern on that as well. It got really tight, and then it broke out on higher volume. And then that's when NVIDIA started its big run. I mean, we were watching this long before it even started to form the consolidation at that 500. We watched the earnings breakout before this, before all of this happened. And it was just absolutely, there's the gap up on earnings. And then that's where we were watching it. So just to summarize that, you have a flat top, that's a base. If you have ramps or ascending and descending triangles, that is your trend breakouts. And I highly recommend you watching the Swing Trader School that we have in our YouTube. go through those videos a couple times. That way you have and Swervo, I think you have a pretty good understanding of when it comes to trading. But if you want to really get in touch with the way that we trade, the best thing that you can do is watch those videos. And also, just for everybody listening, Kobi is actually going to be revamping those, and we will update and revamp our swing trading school constantly, probably 2 or 3 times a year. So he's going to be redoing the videos to make them sexier and sleek and fancy. What the young man can do is pretty amazing. You guys seen what he did with the charting video, so we're going to let him go for that, the base and trend breakout video as well. So you guys watch the ones that we have in there right now, and when Kobe comes out with them, which should be within the next month or so, we'll have you guys watch them again, because we're going to have newer and more updated
examples.
Exactly.
Yeah. Perfect. I love the way you explained that, man. That was beautiful.
Thank you.
Now, I guess the only other thing is just what I'm kind of, not really watching, but still on my watch list. So we have ULS. ULS kind of setting up here with a nice trend. So you have these higher lows off this 21-day moving average, now finding support on the 10, and then you have it tightening up here from these highs. So we're waiting for this, see if this trend can start tightening up really nicely. It is a little slower mover at 4 ADR, but we're just watching it. Then we have RPay. RPay has a long base here, forming some sort of trend right here, but it did make a lower low here, which I don't like to see. So what I'm waiting for is it to build back up and see if we can get across this $11 area. Then we have SFIX.
Yeah, Stitch Fix. I found this one interesting, man, but it's one of those that it's just it's kind of nasty.
It is.
It was doing its thing, setup, but it's another failed breakout, like you were saying earlier. Another failed
breakout here, and then just slap back in. But I'm still keeping an eye. Maybe it'll set back up, but I would just like to see it tighten up. Every tightness is your friend here. We want to see tightness. So UBXG, this is something that you do have a nice little trend breakout here, right here. You have a big move up from $3 to $8, and then it formed a nice tight base, got tight on this 10-day, and then boom, broke out and had a run up here. Now I'm going to see if it can do the same thing here. This needs a lot more time though, so just threw it on here. NDIA, this was actually, I had it marked out as a trend right here. It came back, bounced off the 10-day, and then just continued to rip higher throughout the day. I didn't take it because it's too short of a base consolidation. I usually like to see these around 2 weeks, but it did break out this day, so we'll see what happens. EBS is something you guys want to watch. This is looking really pretty. You have this big move up, pull back, big move up again, and now it's finally starting to form a tradable base. Now, I wouldn't trade it yet. Still needs to get tight, but EBS, definitely something you need to watch. And it is on good fundamentals with this earnings that is driving this stock higher. Then we have CLEU. So CLEU is a China name, and it's just kind of these big move up. Now it's forming a base. So we'll see what happens with this. This needs a little bit more time. And then BRTX. So this is a bio stock, but I'm going to actually probably take this one off my list just because it is below the 90 RS rating, and I don't like to trade stuff below 90 RS. And it's in health technology. But other than that, that's kind of my watch list, guys. So just to wrap things up, I'm starting to dial back my risk, taking a little bit less money off the table, starting to lock in some profits, and we'll see where the market goes throughout this week. But now it's time for questions. And then,
you guys have any questions for Kobe or myself?
I have a question for either of you. So today, what I've said several times today, everything was there to take the trade.
Yeah.
And I almost did until I saw the large gap in the ask and in bid price that I backed off it. And they failed, which is so glad they did, because I think at least two of them I saw, about 3 that way today, and they all failed. So what exactly is going on when you see that wide gap like that?
Well,
wide gap like this?
No, he's talking about in the bid and the ask. So the spread, we call it the spread.
Okay, spread. Yeah, there you go.
So
what's happening?
On both ends, there has to be a buyer and a seller in the trade. Just like if you went to a market where you're placing a bid on something. You know, they say $5, $5. You know what I mean? Somebody's got to be there to pay the $5. Somebody's got to be there to pay the $5.50. Somebody's got to be there to pay the $6. Well, when we're coming to the market, some people already have stocks to sell, but they're only going to sell them at a certain price, and people are only going to buy them at a certain price. And so when you're at the market and you see that spread, those are only people willing to sell at a certain price and willing to buy at a certain price. That usually happens when there's lack of volatility. When you see a lot more volatility or a lot more people buying and selling, you'll see that range get tighter. So you'll see the spread get tighter. So that's why we try to get on a tight price between 3 and 5 cents, usually for myself.
Yeah.
What about you, Kobi? 3 or 5 cents, probably?
Yeah, I'm with you on that one, brother.
That's like the largest, though. Like the best stocks are when they are within a penny. Like at 51, 52, you know, you want to be able to hit buy market. Not saying that you should, but I'm saying that you want to be able to hit buy market and know that you're still going to get the right price. Now, I'm not telling you to hit buy market, but I'm saying you should be able to hit buy market and get the proper price. So when you're seeing a spread like that, don't trust the spread. Wait for it to tighten up. Or set your bid in place if you are seeing volume and you want in the stock, but there's still a pretty wide spread. I've taken some spreads pretty wide just because the technical pattern was really pretty. And so it would like flush out, grab my bid, and then rip, tater, chip to the north side, because that is where all the smart guys are buying. Okay. It comes down and then all the volatility is sitting at that low bid. That's where the market's being traded. All the volume then comes in, and then the range sucks within 3 to 5 cents. You know what I mean? So what you did, Dan Bob, I commemorate you, because it's hard to get hands off of something and say, you know what, if you're not going to give me the right price and you're going to, you know, up the charge by 50 cents and force me to buy at a higher price, then I don't want it. There's always more trades out there, and it's hard to get past that. It really is hard to get past that. So great job, man.
Right on.
Any other questions, comments? No concerns. We will not be going over concerns tonight. Well, guys, if we don't have anything else, I'll just wrap it up. Kobi, if you don't mind. I want to start by saying thank you very much. I really appreciate you doing this. It was awesome to hear your insights, to show that we're kind of on eggshells right now. It's not that we are in a bad area in the market. We're still above a 10-day moving average, but we're bearing down. Or if you guys seen my YouTube short, we're squatting down on that 10-day moving average. We could go higher tomorrow, but we are not seeing the setups in the market. We are starting to see some breath. But until we understand where that market money is heading to, we need to be careful. We need to be cautious, and we need to, if we're going to take a trade, we should take only half of our risk size, as Kobi said. Okay? Yep. So put those stocks on your watch list, but use it as a watch list. Stay vigilant and keep a very close eye. If the market does start to pull back, don't give up on the market. That is the time to watch the market very close. Follow the stocks, the trends, the sectors even closer. So that way, when we do bounce and when we do form new higher lows, you are ready and prepared, and you're the smart money, not the dumb money buying at the highs. I appreciate everybody being here tonight. You guys are absolutely awesome. And if you missed any of this, it has been recorded for everybody's future watch list. Thank you guys. I hope you have an awesome night. And some of us will be hanging out in the Discord a little later. Peace.